Good morning, traders. Welcome to Beyond Profile. Today is Thursday, March 17th, St. Patty's Day. Oil, very nice move overnight, right? We got to retest again in the overnight of the 96.80 level against that prior value area high here. Tap on it, and a very nice move now into the $100 level where we've got some areas of supply sitting here, 101.23s to the bottom of that, which was 99.15s. Now we're into the midpoint, if you will, of that little balance area, and looking good for continuation. I mean, we've got multiple retests of this 96.50 area here, which is very positive. If you're bullish on oil market, that's it's a positive thing to see here for the markets. And so oil is outside of that area and looking like it wants to hold on to a new area up here. We can get rid of this short-term area of balance up here and start looking at how far are we going to retrace back up into this last area on the charts. You got a naked daily point of control up here at 0278 also. Okay, 0278. We've got that sitting there. So crude oil continues, by the pullbacks, and that keeps working out very well for those of you playing that on a swing position for higher prices in the oil market. And the S&P, what can you say about it? Nice retracements last night off those 45 area, and now we're pretty much engulfing yesterday's body 72s. We have yesterday's IV high at 74.50s in this, and we're approaching that here before we even get to the market this morning. Very strong move off the lows, and again, I was sharing with the room traders over the last couple days of how to think this market may want to go even lower. But what's happening is because we've got quadruple witching, which is on Friday, and options expiration and all of that. The institutions can buy options at a very cheap rate when we're down here at the 40s. And look to sell those. I told the room I wouldn't be surprised to see us up at the 1290 level by Friday, at least sometime between yesterday and options expiration. I mean, we're closer probably now to that level than we are going back down to the 40s. But again, anything can happen. We could get news out. But the concept of buying something dirt cheap that expires in a couple days, running the markets back up into some areas and be able to cash into. We looked at some of the folks in the room yesterday had played the spider calls, and they basically doubled in price from the time they bought them at the lows to the time when we rallied back to the 63s. And making 100% on your money. So let's think if you're an institution and you have the ability to just buy large sums of those at nickels and dimes, if you will, and then sell them for dollars. I mean, that's where you can make up some really good hits in the marketplace. Are these kind of opportunities? A lot of people don't think about it from that perspective, but these are opportunities, and there's different ways of being able to capitalize, if you will, on these market moves like this, because we have such large swings on the intraday basis in these markets that one can take advantage of it. With actually some insurance, knowing that if everything broke down where you couldn't get out and it ended up going to zero and you were on the wrong side of the trade, at least you would know what your inherent risk would be associated with that trade. I mean, the maximum amount you could lose technically would be the amount that you put into that option play. So still some people in the room here holding on to some call longs because we're trying to get to, like I said, that 1290 level by Friday. So that would be almost 50-point move from the 1240 level down where we were just the last couple sessions down here. So keep that in mind. So the S&P short-term bottom here, again, continued whippiness. Where do we get back down into some breakdown areas here would really be that 1286, 1290 area. I'm looking at this morning. We're at yesterday's point of control here, pre-market 72 quarter number. And yesterday's IB 74.50. If this fails, we could see rotation back down to that 59 area from the overnight sessions, where we can look for demand to step in and see if we can't play this market back up again. Then from that range, there's quite a big divot in the chart here from the 73s back down to the 60 level. All right, so keep your powder dry in these environments, that's for sure, and trade nimble and make sure you've always got stops in place. Sometimes stops maybe need to be a little bit larger in this environment to participate, but nonetheless, the trading plan doesn't change. The conditions don't change. It's just the volatility changes in times like this, where you have to be a little bit more aggressive and being willing to change your plan intraday. Okay, folks, have a great trading day. We'll see you in the room.